One of the most common questions that comes up from business owners, offer owners, practitioners is, hey Scott, what's the difference between growth and scale? When it comes down to it, this is a fantastic question. I'm Scott Sylvan, coming to you live from Tahiti on a perfect day to talk about business growth, opportunities, scaling, and a fantastic day to talk to you. So this conversation happens a lot where people say, hey Scott, growth and scale. Okay, so growth is this. Let's say you're doing $10 million a year in revenue and you have a 20% profit margin. You got $2 million in EBITDA. And you say, hey, I want to grow my company to be better. Well, what you're going to find is profits are going to get eaten into. You're going to have a higher revenue and a lower profit model. Scale is this. When you can say, I'm using all the internal functions inside of my business, we're doing more in revenue and we're making more profits. And we have the capability of retaining more earnings. That is the difference between growth and scaling. You're like, Scott, how do I get there? Well, some of it's going to come from planning. Some of it's going to come from execution. And it can be a bumpy road. It may be like the ocean out there. There may be some waves to it. So the expectation of it's going to be easy may not be the best thing. It could be easier, but here's what I'm going to share with you to do. I'm going to give you the basics. I'm going to give you some standard information of what's going on. You want to start setting baselines in the departments and looking at how they're spending money, how they're making money. You want to look at your team and say, hey, what are the contracts worth? What is going on? And one of the places that really devours profitability is scope creep and not pricing sales right. So sometimes you have a salesperson on your team that will close at any cost. And the way that salesperson brings deals to you, to your company, to your organization, gets them a little bit of tiny commission, and it's a mini, it's not a ton, and that person's the wrong client. So there is got to be a point, doesn't have to, you can make this decision. There's got to be a point where you're taking a look and saying, who is our right client? Who is the person that we enjoy doing business with? Who should we be spending time with? And if there is scope creep, how do we address it? And if we do have a salesperson who sells a whole bunch of skinny deals and gets us locked up into contracts, how do we address that? Because this one conversation makes a huge difference for you over time. And what you're going to find is these key indicators, these key performance indicators inside of your organization can start giving you warnings. You can take a look and say, hey, what did it take to fulfill? And you can go through and look at fulfillment. Was it time and labor? Were there extra added costs from other manufacturers? Were there things that you didn't know? And so in construction, they have this thing called job costing. And what they'll do is they will take the job and they will cost it all out. They'll put all of the inputs, every single input in. And they'll say, hey, here's all of the inputs that we have going on. Here's what the commission was. Here's how much profit that we made. And then really good companies will score deals based upon the salesperson. They'll look and they'll say, hey, sales dude, I don't know if you know this or not, but every one of your deals is a skinny deal, and every one of these people are difficult. There is something to be said about skinny deals and difficult people because it took a lot of extra to close that deal. So then maybe it's a signal for you that you need to bring in some sales training or some sales coaching, or maybe it's just that the person or the people that you have, some of them are the right fit and some of them aren't. But what you want to do is you want to be a detective and you want to say, hey, at the end of the day, where are we leaking money? Where is the money leaking from? Some of this could be marketing. Are you split testing? Are you looking at which ads are getting you the best return on revenue and what type of clients that they're bringing you? As you start going through the departments, you can start figuring, hey, if we can save a couple of percentage points here and a couple of percentage points there, this really counts towards your scale. This really counts towards your opportunity to grow your business and grow your profits. So if you have a company that's growing, revenue is up and profitability is down, start looking for the reasons, start looking for the leaks, start looking for like, how did this start? Why are we in this situation? And one of the easiest things to do is start with the biggest line items on your balance sheet and start going through and start like, hey, like how come we're not being profitable here? How come we're not being profitable there? And if you make your department heads responsible for each section and have to report out and defend what's going on, you're going to find over time that they start making some better decisions, or you start replacing people. But if you have the difference between growth and scale, growth is you're growing without better profitability. Scaling is you're doing more with the same. If there was an easy way to say it, you got one of three things to do from here. Just one of three. Find the subscribe button, click on it, and every time I send out a video, you'll get an update. 2, hit follow. 3, share this video with a friend. We'll see you soon. Thanks for watching.